Trump's point is basically, look, it's working, we're winning. Is that really the case when the whole intent, I thought, of throwing tariffs at China was to get them to the table? But the fact of the matter is, they are still not talking.
Correct. And look, I mean, Mr. Trump actually is trying to reorganize the global world order. And I think that is potentially not really priced in yet. And I suppose currently it looks like confrontational. Also, sort of, I think from the Chinese side is still a wait-and-see attitude, whether they're really serious. But I think Mr. Trump increasingly made it very clear that from his perspective, he's going all the way. And I think that's why also the markets are still somehow complacent.
Okay, markets complacent, Trump going all the way, meaning this isn't just political, this isn't just about winning the midterms or a second term?
No, I think that's the short-term focus. That's what many people think. Sure. I think from Mr. Trump's perspective, it's much more strategic. Right? It is about reordering the world order. And again, if you think about it, the United States is the largest debtor nation on the planet, and apparently the Chinese are still the largest creditor. And maybe he learned that in New York real estate, if you owe somebody $1 million, it's your problem. If you owe somebody else $100 million, it's their problem.
Their problem.
Right? And I think this is the analogy that I think is very true with regards to China. But I think these are complicated issues.
Right.
And I think what's also important to keep in mind is that this fiscal stimulus and tax cuts and everything is the largest stimulus we ever had outside of wartime.
Is it starting to wear off?
Sorry?
Is it starting to wear off? The stimulus from the tax cuts?
I think yes, more and more, because I think it's sort of, it's a bit like what quantitative easing has done. It actually, it front-loaded returns, and it might be a question.
And there's the law of diminishing returns as well, right?
Correct. Yeah. I think that's the question why I think going forward, investors have to potentially accept lower returns.
Ooh, okay. So here's the thing. You started off saying that markets are too complacent about Trump wanting to go all the way. If markets were not complacent, how bad would things look out there?
I mean, that's a good question, because so far everybody has been conditioned to buy the dip. And in all honesty, that was the right strategy for the last couple of years when we had a quantitative easing-driven market. Now interest rates are rising and we have so-called quantitative tightening at a time when the economy is already at levels that are usually at a peak. So this is a big question. And here, basically, I would argue that markets tend to overshoot and undershoot, but currently still we think you're overshooting, but I think the returns are becoming less and the risks are rising. Okay,
risks are rising of recession at the very least?
I think there's a probability that is not really priced in, but I think the risk is rising with regards to sort of the returns you potentially get from long-only equities versus the risk you take at these levels. That's why, for example, our portfolio construction has shifted into more flexible mandates, unconstrained strategies that potentially can benefit from higher volatility. Because I think what everybody seems to agree upon is that we are late stage and volatility is rising.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.